Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar have a little bit of a, initially in the session when it started, the dollar index wasn't even something wasn't working. It wasn't just on TradingView. I looked on TOS, and I know Blake he made a comment. His wasn't working either, but it's working now. But we are seeing the euro did try and pop up. It actually bumped up against his trend line that I've had in place. Remember, that's the same one that caught it around 1216. We'll back this up a bit. It's kind of holding it in check a bit, but we did go in and see the dollar going and pull back. On Friday, we've been looking for this potentially to go in and happen. My take was because of, where interest rates are and how we've seen interest rates just essentially, for lack of a better word, collapsing. And also the expectations that whether it comes to fruition or not, that the Fed would be have to cut rates in the fall. And then, of course, when you look at how everything's going on with the trade row, and then now the tariffs with Mexico, potential tariffs, that is, certainly didn't open the door for them to move higher, although it was set where it could move higher. So once again, we've lost the key critical 97.89 on that weekly, which is also the 61% and the potential to go in and move lower. Take a look at economic data as we come in this morning. We did get PMI manufacturing coming out. I also saw the news on Italy. It's still in contractionary mode, but it actually improved from where it was. I mean, not a whole lot, but there was some improvement here. And we know that the woes that Italy's under. Also, Spanish PMI came in at 51.3. These were above, as I mentioned, above what they call the contractionary mode when you slip below 50, with the exception of Italy. But looking at the glass half empty versus, half full versus half empty, the point was that it had, improved a bit from where it had been, or right here at 49.7. Coming into the States, and so we got that data out of the way. Coming in, let's take a look here. We do have a market manufacturing that's final at 9:45 Eastern, and we do have market manufacturing PMI Canadian. That'll be at 9:30 Eastern. Also at 10 a.m. ISM. Manufacturing. And it's later in the day at 6:45 Eastern. We'll have New Zealand import prices. And much later at 9:30 Eastern, current account balance right here. You can see that right there for Australia. Also, RBA. That's the big one. That is the big one. We'll go and move this out of the way. So going to move into the news and see where we stand, and then we'll go on and cover over the analysis to start the week. Trump visit tests the UK-US relationship. Donald Trump's 3-day UK visit starting today will be to a country bitterly divided over Brexit, led by a weakened Prime Minister eking out the last few days of a disastrous term in office, and where he is loathed by much of the population. Even the idea of, according to Trump, a rare full state visit was to curry favor for future U.S. UK trading ties. There's no guarantee that the pomp and circumstance will work. Instead, will immediately concern is whether we will add insult to political injury by humiliating Theresa Thompson. Humiliate Theresa May with more talk of who will replace her and perhaps even meaning that one candidate, Boris Johnson, undermined the already fragile notion of a special relationship between London and Washington by warning the security ties are on the line over Hawaii saga. For all concerned, it'll be a long 3 days. Political parties across Europe are being pushed into loveless marriage or convenience by a number of factors. And loosening traditional party loyalties, the rise of upstart movements with the savvy social media strategies. Quite often, one partner gets burned by such marriages, as in the case of Germany's Grand Coalition. So I don't want to spend too much time on this. Let's go into the markets. It's a jarring start for June for world markets as trade war and recession fears intensify. U.S. interest rate cut expectations grow. We mentioned about that. And Trump hits Britain. At the start of the week, packed with macro events from the weekend G20 finance chiefs meeting in Tokyo to the European Central Bank meeting on Thursday and the ongoing Reserve Strategic Review in Chicago to Friday's U.S. employment report. The Sino-U.S. trade row dominated against first thing. After Wall Street indices lost more than 1% on Friday, their lowest levels in about 3 months, the S&P 500 futures were down another 0.5% overnight, following the anxiety surrounding Trump's tariff threat against Mexico late last week. China and the weekend, at the weekend outlined its plans to retaliate for Washington's protectionist push and indicated it would draw up an unreliable entity list of U.S. companies it suspects of threatening its commercial and security interests. Ratcheting up the tech war over the U.S. blacklistings Hawaii, Beijing said it would investigate FedEx over the allegations it diverted mail and parcels intended for Chinese telecoms giants. The tension between the world's two biggest economies has also seeped into military posturing, with exchanges between defense officials over Taiwan and the upcoming 30th anniversary of the bloody Tiananmen Square crackdown. The deepening of the trade rift has also seen many investment banks rethink their outlooks and risks. Goldman Sachs on Monday said it now sees a 60% chance of Washington will levy 10% tariffs on the remaining $300 billion of Chinese tariffs it has yet to tax. That's up from 40% chance previously. At the weekend, Morgan Stanley said that the United States now went further 25% tariffs on $300 billion of goods. Then the global economy could end up recession within 3 quarters. With the U.S. rate futures moving rapidly to a price and a Fed rate cut by September. In Asia, Shanghai and Hong Kong stocks were in the red despite the latest Chinese manufacturing numbers coming in better than the forecast after a stream of poor data. Tokyo's Nikkei ended up down more than 1%, but Kospi bucked the trend. And let's go on and move on. Australian dollar resilient in the trade of face of trade war and all eyes on RBA. The Australian dollar was surprisingly upbeat on Monday to find the downturn in global risk appetite from the ongoing Sino-U.S. trade war, although broader concerns about the world economy kept the currency under pressure against the Japanese yen. On the yen, the Aussie fell to 75.13, a level not seen since early January, when a currency flash crash briefly dragged it to its low of 71.66. The pair broke a crucial chart support around 75.30 on Friday of fears President Trump's aggressive trade diplomacy could tip the world to recession. The Aussie yen trade I've been flagging for a while now has been working well as a hedge against slower global growth, said Chris Weston. There is also a risk to holding Aussie shorts, of course, given tomorrow's cut for the RBA is 100% priced in, and the bank needs to be dovish enough to justify the 3 cuts priced into the market over 12 months. All 44 economists in Reuters survey expect the RBA to cut its rates to an all-time low of 1.25%. Wow, 100%. Official figures out earlier today suggest the economy likely will pick up steam. Last quarter will not be enough to stave off a cut on Tuesday, as home prices were still in downswing and the labor market was showing signs of weakness. So basically, wow, 100% priced in. And on to Forex. The yen brushed a more than 4-month high against the dollar on Monday, and the Swiss franc rose against Trump. Hard stance on trade broadened to countries beyond China, stoking investor demand for safe haven assets. With trade issues remaining front end, investors appetite for risk has been dampened by fears of global growth. The Mexican news is quite punchy. No one really is expecting it to be the same extent they were with China. Mexico is a huge trade partner with the U.S. On Friday, the Japanese currency had booked its sharpest daily rise in more than 2 years. The yen is considered a safe haven asset in times of geopolitical and financial turmoil, as Japan is the world's biggest creditor nation. U.S. and Mexican officials were preparing on Sunday for upcoming talks aimed at averting a trade clash after Trump said he would apply 5% tariffs on the country's goods on June 10th if it does not halt the flow of illegal immigration. A day earlier, Mexican President Lopez Obrador hinted his country could tighten immigration controls to diffuse tensions with Trump, saying he expected good results from talks with Washington. A senior Chinese official and trade negotiator said on Sunday, Washington cannot use pressure to force a trade deal on China and refused to be drawn on whether the leaders of the two countries would meet at the G20 summit. The markets are trying to catch up with the negative news in relation to trade relations. For the time being, said Kumioki Ishikawa, they're seriously starting to react to prolonged trade tensions in a risk-off way. Well, let's go and move into the news now. One of the things that I pointed to was, and the chart that I posted was, if you look at this on the 1 week, pretty bearish right there. I mean, this what you're looking right there. Not only that, but loosen the 97.89 and go into here. Thought I'd already. Oh yeah, there it is. Since the dollar index looks set for a pullback. The first target is 96.63, 38%, with initial support of 97.20. So we've already talked at length, and here's the weekly on the cash dollar index, and you can see that's not very bullish to say the least. And although even on the news, it was saying it was surprised the dollar started out the week a bit firm, but the outlook, I mean, you can probably focus on things like that may keep the dollar from sliding too quickly. The upcoming NFP probably still be a little bit, better than expected or better than most. I mean, when you compare across the globe, but the news has been coming in, bad. I mean, like I said, as I mentioned, to beat that dead horse, but that manufacturing from the prior week, not last week, but the worst in a decade. And, the ongoing trade rally just continues to add concerns as to we may go on and slip into a recession. So let me go and put this back to the daily. But I want to emphasize this. I mean, put the weekly chart to emphasize, the bearishness right here of this bar. And here we are on the daily. As it says, the dollar index looks set for a pullback. The first target is 96.63, which is 38% of this entire move, with the initial support at 97.20. So looking at this, if we go in and break down, this is what we're going to have is right here for 97.20. There's some additional support and probably make the case here, 97.52. But if we do go in and take this dip, don't want to be caught, not looking or with pants down. Let's right in here before we get to 20. Let's look here on the 2-hour chart. Initial support comes in here at 97.45. But my concern is if we break down, I don't want to give a false sense of security saying, okay, it's 45, which isn't very, that's still a good 30 pips lower, but this is where the real support is going to come in initially. But that'd be a pretty good breakdown right here. Tell you what we'll do is we'll put 97.21/45 here. And looking into resistance. Well, we're seeing it right there at the 97.81. I think that's pretty tough to get beyond that. We'll go with this. It's 97.81. There's some additional resistance. I'm not sure it can make it all the way back up here, but we'll go with 97.81 with that thought that we're potentially open for a lower move. Now moving on to the euro. The euro successfully defended the closing daily support of 1130. You can see that right there. Initial resistance is 1190. A daily close above 1190 opens the door for a challenge of 1262. Closing support remains 1130. So once again, you can see they defended this 1130 twice. That was Thursday and Friday. We actually came down here and actually held and even defended on Wednesday. You can see right here, Wednesday, Thursday, Friday. So you certainly made the stand. We're indicating here 1190 right here is our initial resistance, and you can see that's where the market did go on and run into some resistance. That also happens to coincide with this downtrend line here. See there? Getting back to the daily, if we do break a little bit higher, we'll just show here that the first initial resistance would be 1220. With the thought, just like the dollar index, that we can break higher, so you don't want to have it too close. As far as support, well, we've already mentioned here on the daily. Here's this 1130. Not that I'm expected to pull that far back. But we did see a pretty good dip on Friday. Remember that one? And we came back down and dropped even into the mid 30s before finally rebounding. I think that would be defended. right there. We'll go with 1154. Now, the way I'm coming up with this 1154, you can see we saw that dip, and that was pretty quick dip from those highs. But of course, that was on the Friday. But you can see some pretty good volume coming across here. So we'll go with this 1154. It could press a little bit lower. There's all the way down to 1150. But we had closed here on the 2 hour right there at 56. And there's still pretty good volume coming in there. Right there. Let's call it 1153. 1153. We'll parse hairs. Okay, moving on to cable. Cable managed to close above 127. Initial support is 2660, followed by 2590, the 78%. A daily close above 2733 allows for a test of 2825. I think that one's old. Hold on. That was, hang on. Right there, and be a moment. Looks like he didn't do the cable. I'm surprised at that. But anyway, let me go on and take a look because I was even checking the ForexAnalytix on here. I don't know why I didn't get updated. But anyway, let's go move into the cable. So we defended this 126, and we actually made a move to go and push higher here with the cable. And we're seeing this even see a little bit more of a continuation. The support's going to come back down here. It's at that same 25.98. We're defending it, but let's get a little bit closer here on the 2 hour chart. We're so oversold in here. Right there, which really would be a good support level anyway. One moment. There. So support's going to come in right there at 26.15. Boy, this thing has just been down, 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 down. Got a feel for anybody who's been trying to pick this up on the way. I mean, now it's trying to pull back a little bit, but it's just been absolutely brutal. And another one that I was looking at that's just been unbelievable has been the guppy. Holy smokes! But anyway, looking ahead here, yeah, there's resistance here, but my concern is that we can pop the stops easily on this. So resistance that we're going to show here is going to come in at 27.14. 27. There is some resistance here, right here, 26.81. Just like we did with the cash dollar index, or we'll go on here. Go with the 26.81 / 27.14. Don't want to give a false sense of kick. There you go, 26.82. I'll go 27.14. There you go, right there. Okay, moving on to the Aussie dollar. The Aussie dollar has negative headwinds with the impending RBA. The thought is the worst may be priced in. The daily close support is 68.60 with resistance at 69.68. Well, we saw that 100%. Have you ever seen that before? 100% of the economists poll believe that the RBA will be cutting rates. And this has actually been baked in the cake for, well over a couple of weeks, baked in the cake that the thought would be that, and it was even saying that the RBA would have to be very dovish with the thought that 3 rate hikes would then be priced in order for this to probably fall back. So we shall see. We may see a sell the rumor, buy the fact type move here. So when we look at support, then here's that support we talked about. It's 68.60 right here, 68.65 here. But we really have to be quite dovish for this market to go in and break much lower here because so much has been priced in. And probably also would have a tough time because I'm thinking with everything that's been priced in, eventually you think maybe the U.S. and China will work things out. Now, I'm not saying, I've been at the forefront saying that there was never going to be anything worked out. It was a boy who cried wolf. It was just never going to happen. But that being said, I'm not looking at next week, next month, even 2 months. I'm saying like over the course of 3 months. So you'd really have to really knock this thing down to say, wow, we're going to price in so much dovishness, and the thought that also that wouldn't be resolved. If that's going to be resolved, let's say within 3 months, I think it could be resolved within 3 months, then that'll prevent this from completely falling apart. But that's still a long time to think. So what we'll do is, we know where the support level is, and we're going to go with that, which is going to be 68.65. And we mentioned resistances at 69.68. And that was coming in right in here. If that's already priced in, we'll rip up past the 70 cents. So I'm going to go with the 70.27 right here. If they do take out the stops, be like, oh my goodness, it even taking out 70 cents. This is where your first line of resistance would be that you want to measure it up again. 70.27. If we see that reaction. Looking at the Kiwi continues to defend the 64.93 level. You can see that right here. A daily close above 65.76 opens a challenge for 65, 60, well, it should be 66.56, the 38%. A daily close below 64.93 opens the market for a challenge to 63.80. Let's go on and we've already, you can see here the move that's been down here. It's been quite a knocker right here. We'll go with resistance here for 66.12, 66.12. And support, even though they've been defending the 64.93, we'll just move that support right here to 65, which you've had before. So we'll call it right there, 65.10. And let's go move into the dollar CAD. Says the dollar CAD closed above the elusive 35.04, but the daily candle has bulls concerns. A daily close below 34.77 will initially target a test of 33.82. Resistance is 35.73. So we did give it to the CAD. We finally closed above 135.04. I'm sure most people are just looking at it as 35. But this daily candle certainly has bulls a bit concerned. I'm thinking if you're bullish, you're thinking like, God, we finally got above it, and now we're just barely hanging on. My thinking also would be is stops are probably going to be close or probably tightening, and my guess would be this 34.77, as I mentioned. We get a daily close below that, you're going to hit some more stops, and of course, then we'd start to slide further. But we're above it, but it's certainly not that positive in this sense with this close. We have the resistance here at 35.73. There'll be this resistance here at 35.37. But for right now, let's go and mark off this support, which is 34.77. We got that marked off already. Let's take a look on the 2 hour. Well, things are already, listen, things are more bullishly inclined right now here, the way the market's set up. Right now we have this 35.40. It's going to be right here at 35.60. Right there, 35.60. Yes, it's much higher, but and we can quickly make up 20 pips to run up here to 40, but it's going to be here where this market can push. Now, there's resistance above that we've already noted here, which is at 35.73, but it's here that will trigger the market to go higher. If we make one more stab, we start pushing higher, that's going to blast it. So we're going to go with 35.60. And let's move in now to the dollar peso. Well, it finally broke up above this. We'd had this trend line and we weren't going anywhere. Obviously, the catalyst was the announcement of tariffs as early as June 10th from Trump on Mexico if what he says the immigration isn't reined in. Um, So it says here, with the announcement of tariffs to take place on June 10th, the dollar peso screamed higher. Support is 1956, followed by 1942, confluencing with the 1941, the 38% of 1874 to 1983. The pair is targeting a major level 1995, confluencing with 1992, the 61%. So you can see, obviously, we had this scream on the announcement with the tariffs. He had actually announced them earlier in the afternoon, but the thought was, in case they didn't, and then all of a sudden, several hours later, he just turns around and just says, "Okay, well, I'm going to do it." You know what I mean? So, which is probably par for the course. But we did go and say we're looking for 1956, followed by 1942. But here. So let's go and take a look here on the 2-hour chart. Now here you got to be careful because although I don't expect a pullback now, but if they start to say, hey, new is getting a little bit better, which I don't expect that to be announced that quickly, but maybe we might get something reasonably the time frame I'd say around Wednesday if they start to say, okay, things are getting a little bit better, but I don't. As I mentioned, that's where you'd have to watch out for any landmines. But in the meantime, we did have 1956. This is where we comes in right here. Let's go with right there. The moves can happen so fast. Let's go with 1949. Let's go this way. There you go. And on the upside, well, there's some initial resistance right here, some good solid resistance at 1971 and 1980. back into the daily. We already had a huge run up. It doesn't mean we can't push up higher. I think eventually the target they'd be going to right now is going to be this 1995 confluence with the 1992, the 61%. But in the meantime, like I said, I think the market, if we'll push higher here, but the market's going to be open to them maybe saying by Wednesday or Thursday, oh, news is getting better. We're trying to get this under control, and you could quickly see a big dip down here into the 40s. So be cautious up in here. Things continue to not work out well. Then I think we can make it to this 1995. But in the meantime, this may be a little bit tricky to go in and trade here. Let's go and move into the dollar yen. The dollar yen is closed below the pivot of 927 with a target of 676. Initial support is 778. With initial resistance being at 877, followed by the pivot at 927. So we're looking for a move down here to 676. Try and pull this back. You can see we're coming up here with 676. Initial support right now. Well, we've got this level right here at 777. So we'll go right there. This actually comes in right there. So we'll go with that 778 here. I guess at this point you're kind of splitting hairs right here, but we'll go with the 778 right there coming across. And resistance, as we mentioned here, is going to be 877. Right there. Let's take a look here at the 2-hour chart. Just call it 880. Okay, let's go and move into the cross rates. I'll tell you what, boy, these yen pairs have really got shellacked. Since the New Zealand yen closed below the 78%, the next target is 70.29, which is the 88%. A daily close above 71.45 would stall the downside momentum. Well, we closed below the 78%, so you can see there was near even a, a defense there. We didn't open up too badly, but once again, it's still under pressure. We'll have to see how things go through the week right now in equities, but certainly the push is lower. And that's why we have this next target. If we were signing a pause here, so we came down here to 78% and closed below it. So you got to factor in where you'd be looking as far as downside. Initially have some support here coming in at those lows, which is 70.67. We'll so right now we're going to go with 70.69. Because we're silver sold, we're going to give it a little bit of extra room here. We'll just go right there with 71.38 for right now. There's still some more volume coming in here at 71.46. Let's not get overdone here. We'll just go right there. 71.37. Now let's go and move on to the euro yen. As I mentioned, boy, look at these yen pairs have just absolutely got whacked. The euro yen has broken further into the weekly support, 2074. You can see right here, 2074 there. Confluencing with 2070, which is a 78% of this move from 1824 to 2750. Further support would be the big fig at 120, then 1932. Resistance is 2158. So for right now, we're looking at 2074, but you got 2070 as a 78%. We'll go with 2070. And we already noted here resistance at 2158. Let's take a look here on the 2 hour. Right now, let's go with this 2152. Well, it's 53. That's what we're coming up with that 2158. We'll go with 2158 as we had posted there. If we get a little bit of a stretch. Let's go into the euro odd. The euro has twice defended the 60.95 level on a closing basis. Support is 60.40 with major support at 59.93. Initial resistance is 61.63 followed by 62.13. Well, and once again, we have RBA coming up here. You can see here on where they've defended this on a closing basis, but looking for support. Initial blush is going to come in right there at 60.20, 60.20. Doesn't mean they can't exceed that, but that's some good volume there at 60.20. So it could be, you know, if the market overshoots it, let's say how the news comes out, come down here, could come here, and we might go back above it. Let's say up to about 60.38, and if we lose 60.20, then it would be trying to press this thing lower. Let's look at it here on the 2-hour chart. And resistance. Let's give it some room. $61.60. Let's go in now to the Euro Kiwi. The Euro New Zealand continues to struggle with the major level 71.31, which confluences with 71.14 to 50%. A break lower finds support at 70.16, followed by major level 69.42. Resistance is 71.31, followed by 71.74. So you can see here we're still continuing to break lower. And I was saying here is that we continue to have trouble right here with this major level. You can see that here coming across. See that 71.31, that's huge. We've been talking about that. Finally, we're starting to break lower here, and that confluences with the 50%. We're breaking lower here. On initial blush, it looks like we got 70,009. Yeah, let's go with that. We'll even call it 70,008. And resistance, we'll go with 7105. And moving into the ASEAN. Says the ASEAN broke to new lows. Initial support is 74.73. But with the RBA coming up, the pair will likely target 74.47. The 61% with major weekly support at 74.02. Resistance is 75.81. So once again, we've got a tricky one here. Like I said, that might get the, sell the rumor by the fact with the RBA. So if we do see a good little drop, we've got 74.73 coming in place here. With the stretch all the way down to 74.47. Just don't know if they'll make that extra stretch down there. Let's just go with that to be on the safe side, 74.47. This is a good level here, that 74.73. Anything down here would be an overshoot, which is fine. So let's go with 74.47. Do this. there. On the upside, my concern is if we blast through that, we'll fly through this stuff here. So we're going to go right there, 75.76. Let's call it 75.81. 75.81. And on to the guppy. Guppy's broken new lows on the way to major weekly support at 36.02. Initial resistance is 37.36, followed by 38.23. This has just been absolutely relentless. We got this level coming here at 36.28. We'll go with that. And we already had that marked off. And resistance. Right there we have 37.80. We'll go with the 37.80 there. That still stays the same. And going into the sterling odd. After breaking the uptrend line, has continued to trend lower without a pause. Initial support comes in at 81.48, followed by weekly support at 80.89. Initial resistance is 82.53, followed by 83.15. That 81.48 is pretty solid. We're going to go with this, 81.48. And we said 82.53. We could see a pretty good, decent little reaction, maybe. We'll keep it tight here with the cable. Well, can actually move it a little bit lower. We'll go with 82.71 because it's so oversold. We could gun those stops just in case. 82.71. And there's the bias chart. I'll get that posted. And thanks for joining us here on the European crossover webinar.